Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES tested and found responsive sellers at the 2103 quarter to 2105 quarter zone, which is a major area of resistance and marks the all-time high. And it is still an area where sell side can be active, and the zone is going to be in place until it's actually broken. So even though the buy side has been in control and quite dominant over the last several days, we are now testing a major area of resistance, and if we start seeing sell side step in to the other markets, then we could get a pullback off that initial resistance zone, and the zone still has potential to hold. On the downside, 96 to 98 marks the aggressive area of support, and the previous close and the overnight low. Below that, we have Friday's VPOC at 93 quarter, followed by the initial support zone at 87 to 89.5, which is more conservative trade location and a better spot for responsive buyers to step in. In the event of a failure at 87 to 89.5, we have 82.5 to 84.5. The zone calls for a bit of caution if the market is breaking the 87 zone on high momentum. We then have support at 80 quarter, and at 80 quarter and below, we start getting higher odds of responsive buyers being active on first test, and you start running into a situation where you could be exhausting the range and you'd be quite overstretched to the downside, and buyers can be active at 75 to 77.5 and 69 quarters, 71 to 75. Of course, that's in the event of a strong downside momentum move that takes us through the 87 to 89.50. So on first test, the expectation is for responsive buyers to defend the 87 to 89.50 zone, and depending on the reaction we get at that zone, we'll have a better idea of the state of the market and the short-term bias. Right now, heading into the open, our bias is very neutral because, like I said, even though the buyers have been dominant over the last several days, we are at a major spot up here at 03 quarter to 05 quarter, and there is potential for sell side to step in and for a short-term failure at the initial resistance zone. Now, in the event that we have sustained upside momentum and broad market strength, and the other markets are also breaking out above their recent highs here, then a breakout above 05 quarter would mark a break to a fresh all-time high, and there is no hard resistance above 2105 quarter. So at that point, you have to look at the 10-day range analysis on the trader worksheet and determine where the range may get exhausted. And that's really what the 2115 to 2118 resistance zone is based off of. Above 05 quarter, there is no reference level, there is no hard resistance, but we could be exhausting the range by the time ES gets up to 2111.5 and 15 to 18. And of course, that's in the event that we even get a strong upside breakout. So right now, the bias heading into the open is quite neutral, with the understanding that there is still potential for failure. And if we continue to balance and then eventually break 96, then we can quite easily head down to 87 to 89.5, and that would be the area where we would expect a buy response on first test. And from there, if we can get back above 96 to 98, then we know that buyers are still dominant, but that area would be the target, and the broken support at 96 to 98 would at that point serve as short-term resistance. So it's not necessarily the 87 to 89.5 is not necessarily a spot where the market has to completely reverse and go right back up to initial resistance. At that point, it may simply start balancing in a range again. And if you break 87, now you have to determine how the market is shaping up in real time, and depending on the real-time momentum situation, will determine whether 82.5 to 84.5 is a worthwhile fade or not, because now you're going to have 87 to 89.5 as resistance right above. So you may have to wait for the market to get a bit exhausted into 80 quarter or 75 to 77.5 before we look for buy side to step in yet again. So that is how the market is shaping up heading into the open. Very neutral bias, open to a move in either direction, open to a failure at 03 quarter to 05 quarter, with the understanding that we are going to have to see some strong and sustained upside momentum, broad market strength with the other markets also breaking out in order for ES to break above the initial resistance zone. And if we're not getting any decent upside momentum, then that can still be a spot where sell side steps in and it could present a short setup on the day time frame. So let's just see how this overnight balance resolves and how the market responds to the initial resistance zone, and we'll take it from there.